There's a timer ticking on the financial future of millions of Americans. And no, it's not a stock market crash or another housing bubble. This is a crisis that's been lying dormant for 5 years, quietly building power, and it's about to explode. The U.S. government is restarting one of the most aggressive debt collection machines in the country. This isn't just about a late payment. We're talking about a wave of defaults so big, it could financially scar an entire generation. The numbers are just staggering. One analysis showed a shocking number of borrowers hadn't resumed payments even after they officially restarted. They aren't all just refusing to pay. Many are simply lost. They have no idea what they owe, who to send it to, or what their options even are. As of April 2025, nearly 1 in 3 federal student loan borrowers with a payment due is severely behind. The government can trigger what's called administrative wage garnishment. This means they can order your employer to withhold up to 15% of your disposable pay and send it straight to them. In an apparent reversal of a previous announcement, the Department of Education said in early June 2025 that it will not garnish Social Security benefits for now. However, some experts believe this pause could be temporary and the risk might return in the future, and they don't even need a court order to do it. Recent data showed that delinquent borrowers saw their credit scores drop by an average of 60 points, with many seeing drops of over 100 or even 150 points. Default is a black mark that can linger on your credit report for years, making it incredibly tough to rent an apartment. She thought her loans were still on pause, but her servicer changed, and the notices went to an old email. She looks at her paycheck, and 15% of it is just ... gone. Or think about a disabled veteran who relies on his Social Security benefits. While those benefits are currently protected from garnishment, if that policy changes, he could default without realizing it. The most important ones are the income-driven repayment or IDR plans. These plans cap your monthly payment at a percentage of your income, which for many people is a total lifeline. There, you can find your official loan balance, interest rates, and most importantly, the name of your current loan servicer. Now it has run into some legal challenges, and its implementation is currently blocked by court order. There are millions of Americans walking toward this financial cliff who are completely unaware. It could be your friends, family members, or coworkers. It's a systemic crisis born from policy changes and a pandemic pause that left millions in a state of confusion. The threat is real, and the consequences of doing nothing are severe garnished wages, seized tax refunds, and trashed credit. But the solution is clear. You have to be proactive. Log in, get the facts, explore your options, make a plan. The pause on payments is over, but your control over your own financial future is just beginning. Don't wait for a collection notice to show up in your mail. Take action today. Please, share this video with at least one person you know who has student loans. Simple share could literally save someone from years of financial pain. And if you want to stay on top of the financial issues that really matter, take a second to hit that subscribe button. But other IDR plans like Pay and IBR are still available. The idea behind the original Save plan was that a single person earning less than about $33,000 a year, or a family of 4 earning under $68,000, could have a $0 monthly payment. And that's not a deferment. It's a calculated on-time payment of $0 that still counts toward eventual loan forgiveness. Even with the legal fights, the core principle of income-driven repayment is alive and well. You have to see what you qualify for. The Department of Education has a loan simulator and even an AI assistant on its website to help you compare these plans. Once you know who your servicer is, go to their website, make an account, and update all your contact info, your address, phone number, email. This is how you ensure you get the bill, which servicers have to send at least 21 days before your payment is due. Hiding just leads to the harsh consequences we've been talking about. You have options? The Department of Education has a default resolution group. You can contact to set up a repayment plan. You can also look into something called loan rehabilitation, which is a formal program that can stop collections and get you back on track. The Fresh Start program, which offered special benefits, was a temporary initiative that has ended. The absolute worst thing you can do is nothing. The government is actively encouraging defaulted borrowers to get in touch and figure out a plan. While you're there, re-enroll in autopay if you want to use it. Don't assume the old one still works, and suddenly see his tight monthly budget slashed, putting his ability to afford medicine and food at risk. These aren't just horror stories. This is the potential reality for the millions on the path to default. Get a car loan, qualify for a mortgage, or sometimes even pass a background check for a job. They send a notice to your employer, and just like that, it's happening. Unlike almost every other kind of consumer debt, federal student loans have no statute of limitations. The government can try to collect on this debt for the rest of your life. It doesn't just go away. But the point of this video isn't to scare you. It's to get you ready. You have the power to stop this from happening to you, but you have to act now. Notices for these garnishments are scheduled to start going out in the summer of 2025. In the federal student loan world, default is a very specific thing. You are legally in default once you've missed payments for more than 270 days, that is about 9 months. That money you were banking on for a car repair, a medical emergency, or just to catch up could be gone before it ever hits your account. Once you cross that 270-day line, your loan isn't just late anymore. It gets handed over to the government's collection agencies, and the full force of federal debt collection can be used against you. With millions already 90 days past due, that 270-day cliff is coming up fast. A former education official put it bluntly, warning that defaulted borrowers will be hit with a freight train. That is 5.8 million people who are 90 days or more past due on their payments, the highest number ever recorded. It's the official government website. Verify who your loan servicer is right now. Defaulting on a federal student loan isn't like missing a credit card payment. Consequences are way more severe and are carried out with scary efficiency. Double-check your contact information. Find out your payment status. Don't just assume you know. Please, verify. Your financial future could literally depend on it. That means the company you paid back in 2020 might not be who holds your loan today. Millions of borrowers had their loans transferred, and if you missed that email or letter, you might be totally in the dark about who to pay. Millions more are right on the edge. The Department of Education has warned that millions of borrowers could fall into default in the coming months. People who think they all set for payments to resume could be in for a nasty surprise when they realize no money has been withdrawn. It's a tiny administrative slip-up that can lead to devastating results. These aren't just statistics. These are people on a collision course with financial disaster, and a lot of them don't even see it coming. How in the world did we get here? For 5 years, starting back in March 2020, federal student loan payments, and this is the key part, collections on defaulted loans were put on pause. It was a much-needed break during a global crisis. But that long silence has created a perfect storm of confusion. First off, the system literally changed. During the pause, a lot of the student loan servicers, the companies that managed the loans, were swapped out. Second, old routines are broken. Things like autopay, which so many people relied on, might not have carried over to the new servicers. The outcome is widespread, systemic confusion, and all this confusion is a direct pipeline to default. Before we go any further, I need you to do something. If you have a federal student loan, pause this video and log into student.gov. Now, let's talk about what getting hit with a freight train really means. Let's start with your paycheck. Next up is your tax refund. Through the Treasury Offset Program, the government can seize your entire federal tax refund and apply it to your defaulted debt. But it gets even more serious. Beyond having your money seized, a default will absolutely wreck your credit score. And here's the final, chilling piece of this. There's basically no escape. Imagine a single mom working 2 jobs, barely scraping by. Hearing all this is terrifying, and it should be. The situation is serious. Let's break it down into simple, actionable steps. Step 1, get your house in order. I'll say it again. Log into student.gov. That is your single source of truth. Step 2, explore the new repayment plans. The repayment game has changed, and there are powerful new options. The newest IDR plan is called Save Saving on a Valuable Education. Asterisk. Asterisk. Step 3. What if you're already in default? Asterisk. Asterisk. If you're one of the millions who are already in default, don't panic and don't hide. This information is critical, but it's worthless if it doesn't get to the people who need it most. The great student loan default doesn't have to be your personal story.